Good morning, good afternoon, good evening, and welcome to our first Tradecast of 2021 and our first LinkedIn live stream. My name is Deepesh Patel, editor at Trade Finance Global and host of the podcast Trade Finance Talks. On behalf of the International Trade and Forfeiting Association, ITFA, and Trade Finance Global, TFG, we'd like to welcome you all joining us from all around the world, discussing this very important topic around sustainable trade finance. 6 years ago to this very week, I shook hands with the Duke of Edinburgh, Prince Philip, after completing a research mission to the Peruvian Amazon rainforest, exploring the economic value of biodiversity. I'll spare you the tarantula, river rapids, and indigenous tribe stories for another day. A figure I used back then and that I'll use today is 33 trillion US dollars. 33 trillion US dollars is the estimated real economic value of global biodiversity each year. Why so? Biodiverse areas such as rainforests and our oceans are valuable for pharmaceuticals, food, and other products useful to humans. They also provide services like carbon sequestration, climate stabilization, balancing the fragile food chain, recreational value, and providing clean water. Right now, we don't account for these intrinsic values when calculating or realizing the true cost of a trade transaction, such as pre-shipment financing for mahogany or a borrowing-based facility for copper or tin mining. When asked by Prince Philip, who of course was known for his interest in wildlife, serving as president of the Worldwide Fund for Nature for 15 years, what I was doing in the Amazon rainforest, my last words to him were saving the rainforest, of course, but not just because it has cute, fluffy animals. Today, we're taking the washing out of greenwashing. And as TXF's Catherine Morton puts it, we'll be tackling the silent G in ESG and discussing the business imperatives that are driving our industry towards sustainable and greener transactions. Trade is, by its very nature, a consumptive, resource-intensive business, but we know we can do better as an industry. If we are to jointly work towards the Paris Agreement and the UN Sustainable Development Goals, then truly understanding the benefits of sustainable trade assets, appetite from the investment community, and sharing best-in-class practices around the world is critical. Today, I would like to invite my excellent panel to join me on this virtual stage. And I would also personally like to thank Sean Edwards, chairman of ITFA, as well as Roberto Leva and Harriet Resnick, co-chairs of the ICC Sustainable Trade Finance Working Group, for making this happen today. We are joined by NLN Swaroop, Director of Alternative and ESG Distribution at HSBC, as well as being on the ICC Sustainable Trade Finance Working Group, Anne Maria Cronin, Director at Quarter Penny Consulting, Katerina Michael, UniCredit, and also ICC Sustainable Trade Finance Working Group, and Joe Wissing, board member for the ESG committee at ITFA. So I would like to invite the members to join me on stage, and let's start with a quick introduction. Swaroop, in no more than 30 seconds or so, please can you introduce yourself? Who are you, where are you from, and what do you do?
Thank you, Deepesh. Thanks for this opportunity. I'm NLN Swaroop. I work at HSBC and I lead alternate and ESG distribution for trade finance. Very excited to be here and share my thoughts. I'm personally involved in two working groups at ICC for sustainable trade finance, as well as institutional investors in trade finance. And this topic is of highest relevance in both because people are looking to integrate ESG into trade finance practices and also have greater access to capital for trade finance to grow in future. So very, very happy to be here and share my thoughts.
Anne-Marie, over to you.
Yes, good morning. Thank you very much. My name is Anne-Maria Cronin. I'm a co-director of Quarterpenny Consulting Limited, a sustainability consulting firm. Prior to becoming a co-director at QPC, I was environmental social associate director at the European Bank for Reconstruction and Development in London, where I started my involvement in trade finance, working on the EBRD's trade facilitation program, educating and training banks on the environmental and social risks in respect to trade finance. So many years of working in this space, and I'm looking forward to our interaction today on this topic. Thank you.
Katerina, over to you.
Hello, everybody. So thanks, Deepesh, for being here today. Katerina Michael. I'm actually co-heading GTB Germany and UniCredit, and in parallel, I'm responsible person and entry point for the ESG topics in transaction banking, including trade finance for UniCredit from the global perspective. And my touch points with ESG actually last quite in the past, because I used to be for 20 years in commodity finance, and in particular in soft. There is a great topic since decades on sustainable finance and sustainable fair trade certificates, all these topics. Naturally, I'm quite interested here, and I bring my experience within the ICC working group for sustainable trade finance. I'm happy to be here today, Deepesh, finally.
Thank you very much. And Joe, as ITFA's latest board member looking after ESG, please can you introduce yourself and give a quick summary of ITFA to our audience before we move on and start the panel session today?
Yeah, thank you very much for that introduction, Deepesh. It's great to be here, and thank you very much for the audience all for dialing in on this very, very important topic. Real pleasure. Yeah, I'm Joe Singh. As Deepesh has rightly said, I'm the latest new joiner to the ITFA board, which I joined in late December 2020 to look after ITFA's ESG activities. ITFA, i.e. the International Trade and Forfeiting Association, I think is quite familiar to most on the call. But really, it is one of the main industry bodies bringing together the key players in trade finance, forfeiting, and asset distribution. And ITFA's aim really is to strive and bring together that community, to educate the membership on events happening on trade, to work with other industry bodies, to work with regulators, to further foster the evolution of trade, whether that be around topics such as ESG or around technology innovation, which of course is really important for trade, or whether that's about also attracting the next generation of trade finance talent. So that is ITFA sort of in a nutshell. On the ESG side, we're just set out on the journey, and we're very, very certainly encouraged by all the activity we are seeing in this place and the interest, and certainly really good to be on this Tradecast today with you.
Thank you very much. So let's get straight in and get started. What's the definition of sustainable trade finance assets? Joe, do you have any thoughts on this?
Not one, that's for sure. But overall, I mean, there is not a single sort of like definition that you could look up in the dictionary and say this is what sustainable trade finance is, which is fine. That's not an issue, because it's something that the industry will develop over time, as it does with so many other things. It took quite, I'd say it took a number of decades actually for there being sort of like a bit more of a glossary and of a summary of what trade finance overall is and what it entails. So we certainly see a push by financial institutions, by NBFIs, and then certainly again by the other industry bodies next to it, such as the ICC, such as also BAFT, to come up with definitions, come up with common standards, and to lead us to a bit more of a clue what actually we're talking about, to make sure we all sing from the same hymn sheet. So while we don't have one single definition today, I'm really optimistic we are moving towards that, and at the same time we also don't need to sort of like have a dictionary like term, as long as we all singing from the same hymn sheet.
Absolutely, but it's quite a vague term. And Katerina, where does the line get drawn, perhaps between sustainable trade finance, green finance, and ESG?
And that is a very question, Deepesh, and I have to admit that I believe this is still a floating, line in between, mixing just things between, sustainable trade finance, as I said in the beginning, is somehow in the word since decades. And so we all know all these certificates, and what we always forget a little bit is that sustainability does not only means green, which is the differentiating factor to the green finance part. It is social and it is governance. So it means transparency on supply chain. It means social rights for the supplier employees. And of course, it also have a look on the whole supply chain, including segments which we never had a spot on, like transport shipping, for example, is a very important factor. And the ESG itself, there we need to be a little bit careful not to create too much washing and marketing exercises. It is a serious topic, but if you look around how advisors, law firms, etc., are playing this game, we need to really be careful not to conclude wrong decisions from this. There are figures in the world like 3 trillions of available financings for ESG, and actually there are no projects. I think we need to have a look into what we mean with ESG projects, and we need to target the opportunities and to cluster the segments a little bit more, besides the point that we need to have clear definitions, common standards on a global perspective, which, to my perception, will still take time.
Thanks very much, Katerina. So what could be the impact of defining sustainable trade finance? How could it benefit the industry?
Yeah. Thanks, Dipesh. I think, just to echo what other panelists are saying, defining sustainable trade finance is actually pretty foundational for this work, right? As in, for this to evolve, and we often forget that sustainable trade finance, once defined, can actually lead to many benefits, not just the common benefit of generating a standard and getting everybody to work in a similar way, but really creating value chains of the future. And that's where the focus now is. And this is amplified in the current COVID crisis, where many of the businesses are now looking to reimagine their businesses, are having to reorient supply chains and really change based on the new consumer behavior and developing resilience within their businesses. And that point is inherent, that as the value chains evolve, developing standards for sustainable trade finance is very, very critical, because only then we will be able to make finance accessible for these new emerging value chains in the right way. Because unless you have a clear definition, you can't increase the access to capital, innovation, and thereby creating more resilience in the system. So I think it's quite foundational. The work that has happened from LMA and green loan principles, etc., is very good. And now there is talk amongst industry bodies, like Joanne mentioned, around ICC and other industry bodies, to see that we develop a common standard. And I think that's where policymakers and institutions, industry institutions, have a role to really develop this common standard, which are acceptable to various stakeholders. So the value is really in developing trade finance and making it accessible in future for us to define sustainable trade finance.
Deepesh, we can't hear you.
Apologies. Is this better?
Yes.
Pamela Ma, who says, we know there's no definition and that everyone refers to different things, that it will take time, and panelists are talking around my questions, so I'm going to push you guys to define this as best as possible. So just moving on to the next section now, the business benefits of sustainable trade finance. And Anne-Marie, are we greenwashing still, or are we actually trying to use buzzwords?
Yeah, I mean, Good question. I mean, when you look at the word sustainability, I mean, we look at marketing departments and companies are still using sustainability to market their products and services that to be pitched as sustainable, because these are easier to sell, right? But these are companies who try to claim the high ground and trying to keep out their competitors and their rivals, and they're spending actually more resources in looking green and appearing green than actually on their own environmental footprints. So they can be quite misleading, these buzzwords of claims of being green or sustainable or eco or fair. But you know, these companies are kind of jumping on the bandwagon as such. And these claims can actually make non-green products hard to distinguish from those that have been verified as with green credentials or verifiably green. And then there are companies that are very good and very committed and they know what they're doing, and these firms that are more serious about green are those that do have positive impact on society. They don't pretend to be, or they're not talking about it, but they are actually having positive contribution and they have a plan. Just on one thing, when we've been going through this year of lockdown during this pandemic, what we look at is consumer behavior as well, and consumers are becoming evidently more and more conscious of their own environmental impact, and more companies as well are actually trying to sell to the world or to the consumers how much they care about the planet in their marketing. But consumers are paying more attention to the issue of sustainability, I think, and it seems to be people more on the internet researching products, looking for the word environment as coming up a bit more in Google searches for the products that they want to purchase, and say that they want products that they want to buy, that these products must be locally sourced or naturally sourced or sustainable. So how and where and how a product is sourced is becoming more important in the purchasing process. So I mean, greenwashing does open the doors, but greenwashing is one of the biggest threats to sustainability. So companies and retailers, we need to be aware of this. So if we let companies get away with talking and not doing the walking, and not demonstrating that they're actually doing something on its sustainability, then we're not going to see real change.